All right, starting from a daily chart. This today's obviously Monday, Monday, May 11th. New week, new power of three. I mean, on the daily chart, there's not that much to cover, honestly. The profile, sorry, not the profile, but the order flow is very bullish. Price leaves fair value gaps open. When it does trade into one, right, it just an IO Fed type of entry. And Friday, right, with the strong closure inside of the week. So in terms of discount arrays, we have a rejection block, which is a down close candle. Well, yeah, I guess we can consider it an order block because on the lower time frame, sorry, this was a shakeout. We can look at it. We can look at it when we look at the hourly or the 4-hour chart. But if price is really bullish today, in my opinion, I don't believe that it'll come back here. I think that worst case, if it's not bullish, it can create some kind of consolidation day. Okay, by doing so, creating right some kind of fair value gap on the daily, and then that would give an opportunity for Tuesday to maybe trade into it to trade higher from there. Okay, so in terms of premium array, sorry, not premium array, but premium target, we'll look at some standard deviations when we look at the lower time frames. But the idea here, I mean, the daily chart is pretty clear. There's not that much to talk about here. The trend is bullish until the markets start giving us a sign that it's going to stop being bullish, okay, either through some kind of daily consolidation or lower time frame dealing ranges being broken. We can assume that until one of or the other happens, sorry, we can assume that the market will keep trading higher. So let's see what's inside of this range here. We can look first at a 4-hour chart. If we look at the previous week's profile, we can see that this was a classic bi-week profile. The market here left us a couple interesting PD arrays for the week that we're going into. If we grade the previous week's range, right, since it was an expansion week, right, we can see what did the market leave above 50% of the range. And we have very obvious PD rays at these levels, okay, such as there's two fair value gaps here, and there's the high of a bullish order block. Sorry. So if the market is really bullish this week, for all it matters, it could really simply create a low of week at these levels, okay, to trade higher. Personally, what I would like to see, my best case scenario, would be Monday creating some kind of consolidation. But eventually, what I would like to see is a low of week formed inside of this fair value gap. Ideally, not even closing it, but simply some kind of IO Fed at these levels. Okay, maybe at most 50% of it, right? Or where the high of the order block is located. And then from these levels, the market keeps trading higher. So important fair value gap, important fair value gap, important order block. Why are all these three periods important? Because the previous week's profile was classic buy. Okay, so it was an expansion profile. So automatically what it leaves above 50% of the range is important. And the fact that the week closed as an expansion, okay, not only the day of Friday here closing as an expansion, but the overall week closing as an expansion, in my opinion, favors this, or it can be a consolidation week, okay, since the market has expanded a lot. So key level, okay, if the market, okay, so in case the market were to disrespect, say, this fair value gap and the rejection block of the order block, then at that point I think that a good low-hanging fruit would be the low of Wednesday. Okay, Wednesday, May 6th. Why? Because it has no wick, it has a volume imbalance that's not been filled yet. But again, for that to happen, the dealing range overall would need to get broken, because the range of Friday here, the previous day, right, is not only where our PD arrays of interest for the week are located, but it's also the lower time frame dealing range. Okay, this is where At these levels, the market had some kind of a double purge, right? And then from the double purge, broke structure above. So, right, this idea of looking at sell side objectives, okay, would only be valid, obviously, when the dealing range is broken, but we can get some early signs, okay, that the dealing range won't be holding if the levels of interest inside of the range are not holding price as support, especially this fair value gap, right? This is really the one of interest in my opinion. But look, if the market is really bullish, you can simply trade to this one, create a low week at these levels, and keep expanding, leaving this as a breakaway. But ideally, ideally, I like to see an IO Fed to keep trading higher. Okay, so if these levels break, low-hanging fruit, the low of Wednesday, but pay attention if it even were to trade here. What time of week is it? Why am I saying that? Because very likely there could be some kind of divergence, okay, at the previous week's low. Because at the moment, the S&P 500 is not as strong as Nasdaq. And you can see that by the way that Friday closed, right? Friday on Nasdaq displacing through the high of Thursday, while the S&P 500 simply wicking above it and unable to displace the range. So if the market is going to be heavy, okay, as in looking for sell side in the early week, look, it might do something like this, but be careful once you start trading at these levels. See what time of week it is, okay? Is it Tuesday or Wednesday, and the market's trading at these levels, and there's a divergence with the previous week's low? That can be enough, okay, to send prices back higher. If that were the case, you can use these fair value gaps as reclaimed, okay, such as the order block also. If the order block were to get invalidated, but then the trend started to become bullish again, you can use not only the fair value gap but the order block as reclaimed. So key fair value gap, key fair value gap, key order block. If you look at the previous day's range, look, it looks similar to the 4-hour chart, right? We can see, if we look at the previous day's profile, classic buy obviously. You can see there's a fair value gap cutting right through 50% of the previous day. So if this fair value gap is traded to, this in my opinion is the level of interest for today, Monday. But again, like I said before, if price is really bullish, it doesn't need to come back all the way down here. It could simply hold the fair value gap that's located at these levels, create a low of day, and start trading higher from here. But if it were to trade inside of here, okay, very important to see what time of day it is. And also obviously the reaction, right? Does the market come in these levels and it's a key time of day and displaces, or key time of day and wicks, right, and starts creating divergences in the range, then obviously that would be a good opportunity to trade long towards these levels, okay, and the long, obviously all depending on the daily profile, could make a new high of day, or a new high above the previous week's high, but could also end up being some kind of consolidation. Again, this will all depend on the daily profile. I mean, there's not much else to cover so far. The 4-hour chart is really telling the story for me, right? Two obvious fair value gaps again. I keep specifying it, but I keep talking about it, sorry, but it's very important, right? Just like last week created the low of week inside a key fair value gap, right? Then price was bullish. Right, the same scenario could happen this week for all that matters, right? Fair value gap at 25%. Right? One of these, whatever, I'll just highlight both. But very likely if the week will be bullish, and again, you see a shakeout in here on Monday or Tuesday, we do have enough narrative to keep trading higher. Now, in terms of objectives, okay, premium objectives that you could be targeting, there's obviously the round numbers, okay, 30,000, 30.5, 31. But if we want to be a bit more precise in this analysis, we can use some standard deviations. Personally, I'm using these ones. Why? Because this here was the day of Thursday, which led to a double purge inside of the range. The previous day ended up opening, sweeping the low of Thursday and breaking structure from these levels. So creating here an intermediate term low, right? So this is our dealing range at these levels. So we can grade the range of the shakeout, right? The order block forms at these levels. There's a fair value gap cutting through it. So clearly here, this was a shakeout. All right, we can see that so far the week has opened at -1 standard deviations. And the previous week has left us fair value gap inside of this range. Right, so if you see again an early week shakeout inside of this range followed by a break of structure, in my opinion, that is enough to assume that the market this week will be trading towards, the range of at least 30,000. I personally think it's going to trade higher than that. But as a low-hanging fruit, right, then obviously you would need to see the time of week around these levels and what's the reaction. But I think that these standard deviations can be a good low-hanging fruit. And then as a final objective for the week, we'd be looking at the range around 30,300 to 30,600 or so. From the open that we currently have, this would be a range of 4,000 or 5,000 ticks, so definitely doable in case of an expansion. We could even go past it. So that's covered in terms of premium arrays. We looked at the key levels for the week, for the day. We looked at the dealing range. Okay, so I think that there's everything that we need for tomorrow at these levels. Will just be important to see where does New York come from. Okay, does New York come from the respect of one of these fair value gaps in the range? Very likely we'll keep trading higher. Okay, either trading higher to expand or trading higher to then end up failing and consolidating. Or do you come inside New York and these levels have been broken, right? Then see what either London or pre-market left behind. Did it leave some kind of fair value gap behind? If yes, New York could be trading into to trade towards the previous day's low. Watch out for any divergences. Okay, so key levels identified, right? And from there, just it's time and price, right? Just wait and see the profile that develops around them.